Good morning and welcome to the Killik and Co market update. Last week we talked about the relative calmness of markets and we looked at the VIX index, also known as the fear index, which was trading at a relatively low level and therefore implying a relatively low level of expected volatility. However, this week the ratings agency Fitch has downgraded its rating on US government debt, and that has caused a little bit of a sell-off in markets this week, as well as a 15% increase in the VIX index. There are three major credit ratings agencies called Moody's, S&P and Fitch. All of them apply ratings to government bonds and to corporate bonds to show how risky they believe these bonds to be. They all use quite similar rating systems, as you can see here. The highest or the least risky credit ratings are on the left and the riskiest are on the right. The ones in green are generally referred to as investment-grade bonds, and the ones in pink are referred to as sub-investment-grade bonds or junk bonds. Fitch previously had a AAA rating on US government debt, but that has now been downgraded to AA+. A couple of reasons for the downgrade were the growing level of overall government debt in the US and the increasing disagreements between the Democrats and the Republicans about this level of debt, also known as the debt ceiling. By way of comparison, Fitch rates UK government debt as AA-. The downgrade to US government debt caused a drop in both equity and bond markets. Here are the S&P 500 and the Nasdaq Composite over the year to date. The Nasdaq is still up over 30% year to date and the S&P is still up over 15%, but you can clearly see those drops that have happened this week. I've just mentioned that both equities and bonds dropped in price following Fitch's downgrade, and this increasing correlation between the prices of equities and bonds is starting to become a bit concerning for investors. In the past, the lack of correlation between these two asset classes was a positive. Investors tend to buy bonds when they're feeling scared, and they tend to buy equities when they're feeling confident. So these two asset classes have often moved in opposite directions. So if you hold both in a portfolio, that was historically a good way to reduce volatility. More recently, however, that level of correlation has been declining. Here's a chart that shows the return of the S&P 500 index in each calendar year in pink and the return of US Treasuries in green. If you look at 2008, the year of the financial crisis, stocks lost 37% while Treasuries gained 65%, partly due to the flight to safety and partly due to the drop in interest rates, which suddenly made existing bonds much more attractive. The following year, the stock market rose as investors piled back in and bonds fell. If you look at 2022, however, you can see it's the only year since 2007 in which both asset classes have dropped, so that increasing level of correlation has made portfolios more volatile. And finally, earnings season continues and Amazon has become the latest company to beat expectations. The majority of Amazon's profit comes from its cloud computing division known as Amazon Web Services, or AWS. The shares did sell off in 2022 along with the rest of the tech sector as investors became worried that growth in cloud computing was slowing down. More recently, however, that growth has started to stabilize and share price performances have been recovering. Amazon shares are up over 50% this year so far, and they gained a further 9% last night in after-hours trading after publishing their results. What investors appeared particularly pleased by was the improvement in the gross margin. Tech companies, including Amazon, have cut a lot of employees this year, and this has had the effect of reducing costs and increasing their profit margins. So here you can see the steady increase in Amazon's gross margin. Moving on to have a look at next week, we're coming towards the end of reporting season now, but we've still got some big companies reporting next week. We're looking forward to Walt Disney, Ørsted and Deutsche Telekom. That's it from us. Enjoy the weekend, and we'll see you next Friday.